Hi everyone, Maria Tyler here. Today I'll be taking you through entering your financial statements. So the point of doing our assessment in our unit is to get you familiar with your financial statements. And to do that, we force you to look through your financials line by line. So this is the point of actually entering your financials and subsequently restating them. So we want you to type out your company's financial statements into your company's spreadsheet. And when you're looking at your company's financial statements, if this is the first time you've looked at them, we want you to explore them and become familiar with them. You will need to spend some time doing this, okay? It doesn't just come easily to anybody. We've spent years, your teaching team has spent years studying financial statements and working with them in practice. So we are fairly confident with using them. That's what we want for you. So we're introducing you to general purpose financial statements in our unit. And we ask you line by line to look through and read what your financial statements are telling you. So your statement of changes in equity is the first one we enter. We then enter the balance sheet, and finally we enter the income statements. Now, your statement of changes in equity can sometimes be called statement of movements in equity or changes in equity. There's not too many other names for it. The balance sheet can sometimes be called your financial position statement or statement of financial position, consolidated balance sheet, and your income statements are often called profit and loss statement or income statement and comprehensive income statement or statement of comprehensive income. Now, sometimes these two statements are combined into one. Your company may not separate them into two, but we collectively call them income statements in our unit, regardless of whether your company shows them as two separate statements, profit and loss and comprehensive income, or one statement. Okay, and more about that soon. I'll show you Wesfarmers actually separates them into two. Wesfarmers is my example company. Okay, so let's get ready for the next step. So first of all, download your financials as electronic documents if you can. So I've already done that. You can see for a number of years, I keep doing it every year. So I have a few. You only really need to do two, download two. I'm actually just going to be using the 2019 annual report and the 2017 annual report because each annual report gives me two sets of figures. Okay, so in the 2019 annual report, I have 2018 and 2019 figures. In the 2017 annual report, I have 2017 and 2016. So that gives me 4 years worth of figures, which I need to enter. Now, you don't need to print out your annual reports. In fact, don't print them. You'll be killing lots of trees. You only need to, if you're a bit like me and you like to see manual documents and you like to tick and flick lines and write on things, you only need to print out the 4 to 5 pages that are actually your financial statements. Okay, so first of all, you need to know what the financial statements are, and we cover those over the first couple of weeks of lectures. So they are your income statement, your comprehensive income statement, your balance sheet, your statement of changes in equity, and your cash flow statement. Now, we don't cover the cash flow statement in this unit. We look at it in the subsequent unit. So really, you only need to print out the 4 statements, okay? And I've done that for my company already because I like to do just those pages. So you can see I've got the statement of changes in equity, the balance sheet, and my company's 2 income statements, income statement and the statement of comprehensive income. That's for the 2019 year, and I've also done that for the 2017 year as well. So I can physically see it manually. I'll still show you the electronic versions as well. Now, students often ask, they've got at the top of their company reports, some of your companies will have like a little word that says consolidated or parent or group. We want you to use the consolidated figures or the group figures, okay? Same thing. We don't want you to use the parent figures. Parent means it's just that company itself. So we explain it's one of the commonly asked questions in our unit, and so we cover that a few times in the lectures. So we don't want you to use the parent figures. We want you to use the whole group's figures. So it's the parent and all its little baby companies or subsidiaries. Okay, so use consolidated or group figures. Now, every now and then, you will also come across what we call restated figures. So in Wesfarmers, in their balance sheet, they've got no restated figures, but in their income statement, at the top of their comparative column, which is the second column, they've got a little tiny word above the year saying restated. Now, that's different to the restating that we do in our unit in subsequent assignment steps. This basically means Wesfarmers has changed some way that they prepare the financial statement figures for this year. Usually it's a change in accounting policy, but it can be a couple of different things. And when they do that, they have to go back. So in 2019, they've changed something in the way they prepare the figures. So what they have to do is they have to go back and prepare the previous year's comparative figures with those same policies or with the same changes. In the same way that they've prepared the 2019 figures, they have to go back and do the 2018 figures as well. So that's what it means by restated. And what this means is, if I was to pull the 2018 annual report out that they published last year, those figures for the income statement would be different to the 2019 annual report figures, which for 2018, the comparative year. Okay, so that's why they say it's restated. Now, if your company's done that, it's up to you which set you choose, if you're entering 2018 from the 2018 annual report, or whether you're entering the comparatives from the 2019 annual report for the 2018 year. Doesn't matter, just be consistent. Okay, so if you have restated figures like Wesfarmers does, it's up to you. You can choose to enter the restated ones, which I'm actually going to do because I'm only going to open or print out one set of financial statements, which gives me 2 years worth. Or you can print out every year and enter them directly from each of those annual reports. That's fine. Just be consistent in what you're doing. Now, the only time it will affect your entering will be if a closing balance, which becomes the opening balance for the next year, is different. I don't think Wesfarmers is actually affected by that, but a lot of companies are, and it's normal. All we do is we just get you to insert a line and just put the difference there. So the previous year's closing balance, whatever the difference is to the next year's opening balance, just simply take the difference and put it in a line, and then you can start, and it will help your financials to balance. Okay, so that's all we do, and I'll point that out when I'm entering the financials. Also, the biggest tip I can give you is to use formula in Excel to check your totals, okay? Because the formulas help you to see whether you've accidentally made an error, and I have done that in previous videos. I've just entered a number incorrectly, so transverse, or I've skipped a line, and having the sum formula in Excel has helped me to identify that I've actually made an error. Now, there's also, when you use the sum formula in Excel, when you're checking back against the totals to your financial statements, sometimes you might be out by like 1 or 2, and that's just due to the rounding. Because your financial statements are denominated in such large amounts, thousands, millions, sometimes billions of dollars or euros or pounds or whatever your company presents them as. Due to the rounding of such large numbers, sometimes they'll be out by 1 or 2. And when you put a formula in Excel, it is slightly out to a total. That's fine. Don't worry about correcting it for 1 or 2. That's just a rounding error. You can write about that in your Word document. Say, I used a formula to check my totals and I was out by 1 or 2, and that's due to rounding, so I'm not worried about that. All right, so you need to go and get the company spreadsheet from Moodle. So the company Moodle site, this is for a previous term, but essentially we set them out the same every term. It's in the top central panel of Moodle. It's called Company Spreadsheet. So click in that, you'll get a little folder, and you can click in, it'll say Company Spreadsheet 2020, and you click in that, and then it will open your spreadsheet for you. Now you do need to tailor your company, and Martin's done a little video showing you how you can tailor it. Okay, put your company name in. So for me it's Wesfarmers, that's my example company that I use. And for the year ended, and Wesfarmers has a balance date of 30 June. Now you can tell what balance date your company usually has because they put it in the headings to each of their financial statements. So 30 June is mine. Yours might be 31 December or 30th September, 31st March, 28th February, whatever it is your companies can choose, they will let you know in the headings. So enter your, and that once you enter these in, the headings, they should flow through, except for the balance sheet, because the balance sheet is as at, and we cover that key concept in the lectures as well. So the balance sheet only shows you figures at one point in time, so it is as at your balance date. Every other financial statement shows you performance or changes figures for a period of time, so we call it for the years ended or for the period ended, and the years should already be updated in there. Okay. So we set it out, we enter the statement of changes in equity first. We only enter the total column. So I'm just going to go and show you the financials, what I mean with that soon. Then we'll enter the balance sheet. Then Then we'll enter the profit and loss with the comprehensive income section underneath the profit and loss. We'll enter the income statement first and the comprehensive income statement next. Now, some companies do have these set as two statements. Some companies have these as the one statement. Either way, you need to enter both the information in the profit and loss and the information in the comprehensive income statement, okay? And once we finish entering all of these three or four statements, we will actually, I'll show you how to separate finance income as well and do some checks and balances at the end. Okay, now when we go to our company's financial statements, I'm just going to show you the format, okay? The statement of changes in equity is sometimes set out differently to your other statements, so we only want you to enter the total column. And I'll show you what I mean. I'll just go to the 2019 annual report for Wesfarmers. So you can see the income statement set out with two columns. So we've got the years as columns and all of the other items as rows. So same thing for the balance sheet, the items as rows and the years as columns. Now when we get to the statement of changes in equity, you'll notice it's set out in a different way. Now, not all companies do this, but Wesfarmers does, and a lot of companies do. They'll actually have the years as rows. So you can see for the 2018 year, it's as rows. For the 2019 year, it's also as rows. Okay, so this is like the opposite of how the other statements have been set out. And then they've got the items of equity as columns instead of the years. What I meant on the previous slide was don't worry about entering each of these items. We only want you to enter just the total column, just this last column here. Okay, so don't worry about entering the items in the statement of changes in equity, just enter the total equity column. So now that I'm actually on there, I like to start with the earliest year first. It doesn't really matter. The reason I start with the earliest year first is I can then link the opening balance for the next year to the closing balance for that previous year. So I like to start with the earliest. So I'm going to enter my 2016 is going to be the earliest year in my set of financial statements here. 2016 is going to be the first year that I enter, and then 2017, 2018, 2019. So for these two columns, the 2017 and the 2016 years, I'm actually going to be using the 2017 annual report. And for these 2 years, I'm going to be using the 2019 annual report. So now, the idea of the assignment is that you get to know your company. So what we want you to do is start with your company and write down and type in every single line. All right, so for me, I know that I'm using consolidated figures. So we start with an opening balance. So let's just spend a bit of time to study this statement to start with. Now your companies might actually flip that the other way. They might actually have the items of equity as rows and the years as columns, in which case that's nice and easy for you. It's set out in the same way as all of your other financial statements, but for most companies, they'll actually set them out like this, and the format will be very similar. So they will all start with an opening balance. You need to enter an opening balance as your very first line, all right? Then they'll have adding all the profit underneath that. So they'll say the opening balance for each of these items was add to that the profit for the year. And we'll learn in the first few weeks of lectures, that's how the financial statements are interconnected. The profit from the profit and loss statement gets transferred to, or it increases your shareholders' equity, increases the owner's equity. So we add the profit or take away the loss. Then they'll list other items of comprehensive income, okay? So underneath the profit, they'll say opening balance plus profit plus or minus items of comprehensive income. And then this last section down here is what we call transactions with shareholders. And then they will arrive at a closing balance for the year. So that's for the 2016 financial year. That closing balance becomes the opening balance for the next year. So for the 2017 financial year, it now starts with the same closing balance from the previous year. So opening balance for 2017 plus profit plus or minus all the items of comprehensive income plus or minus the transactions with shareholders to arrive at a closing balance for that year. Okay, so what I need to do is I don't need to repeat these all the time. I just need to make sure that every year we've got an opening balance. So there's the opening balance, there's an opening balance, there's add profit, there's add profit. Then we've got heading for other comprehensive income, we've got exchange differences, same down here. Changes in the fair value, yep, same down here. Remeasurement, defined benefit. So we've got exactly the same items of comprehensive income from 2016 to 2017. Let's have a look at the transactions with shareholders. We've got share-based payments, issues of shares, proceeds from the in-substance options and equity. So we've got exactly the same things in 2016 and 2017, which is a bit unusual. 2019, let's go and have a look. Now here we go, we've got the opening balance, and there's an opening balance for the 2018 and 19 years. We've got add profit for the year, items of comprehensive income, let's have a look. So with the exchange differences on foreign operations, we've got exchange differences on the disposal of foreign operations, and we don't have that down here. So we've got an item in the 2018 financial year that we don't have in the 2019 financial year, and that's fine. Just means there'll be a figure for this item in the 2018 financial year and none in 2019. And probably none in 2016 and 17, because I don't think we had that back then either. No, we didn't. So there'll only be one figure for this particular item, which is fine. Changes in the fair value of cash flow hedges, same down here, and defined benefit plans. So I'm pretty sure they're the same for every year except for 2018. We've got that extra item of comprehensive income. Then we have share-based payment transactions. We've got our KEEP, which is their executive performance remuneration, their share plan for their key executives. We've got KEEP down here, but we've actually got a few other items, transactions with shareholders, which again is fine. Just means there will be no amounts for these in any of the other years except for 2019. Okay, so don't be scared of these terms. Take the time and get to know what each one of them are, and they'll be different for every company. So I know these ones are to do with, say, in 2019 financial year, Wesfarmers did a whole heap of selling off of a number of its subsidiaries or its little children companies, including Coles. It still owns a very small amount in Coles, but that was completed in November 2018, which is in the 2019 financial year. So this is to do with part of that demerging or selling off of its subsidiaries. So let's go and enter it in. So I'll start with the 2016. So I'll see if this will copy and paste. Start with the opening balance. First line has to be opening balance. I don't know if it will, because normally it doesn't. It did last year for me. It didn't do it in the previous years. Copy, Control-C for copy and Control-V for paste. Oh, it's kind of done it. I'm going to change this to say opening balance though, because it's got to be the opening balance for every year. Then add net profit for the year. I don't need that in bold. This is a heading. You have to get to know what's a heading and what's a total. Okay, that's one of the most commonly asked questions. I just don't know. You have to spend the time. I'm sorry. There's no shortcuts. You really do need to go through and say, hang on, what's a heading, what's a total? And the only way that you can figure that out is to spend the time doing a bit of calculator adding. So for me, I would go, okay, this looks like a heading. It's got no figures attached to it. And that's how you usually know what a heading is. A total will usually say total in it, but sometimes it doesn't, especially on the income statement. But how you know is usually companies will put lines in, and you will actually be able to add that figure up on your calculator. So I can read it and say, okay, this is my heading for other comprehensive income. These look like they're items because they've got figures next to them. This one says total other comprehensive income. So I wonder if that's the total for these three items. So you can actually go through and go positive 15 minus 90 minus 3. So let's pull up a calculator and go, oops, try that again, put it on screen for you. So positive 15 minus 90 minus 3 is minus 78, which matches to that total. So yes, that is a total. I actually had to manually check that. So I know that line is a total. Then it says total comprehensive income. So what's the difference between other comprehensive income and total comprehensive income? This is so confusing. There's so many different terms. That's right. It is a bit confusing. And students have pulled me up on this because sometimes I tend to just talk about comprehensive income and don't define which one it is. There is a difference between other comprehensive income and total comprehensive income. So other CI versus total CI. So other CI is all of the items of CI. all of the items of comprehensive income. Total CI is other CI plus profit. Okay, so you start with profit plus all of the other comprehensive income, and you get total comprehensive income. Okay, so I do go over that term a few different times because it has been a bit of a confusion or confusing item for students, and so I make sure that I always specifically spell it out. So total other CI is the sum of those three items for me, for my company. Get to know your company. My total CI is going to be that 78 plus my profit. So, well, minus the 78 because it's in brackets, which is negative. That's another thing. Students say, oh, what's a bracket mean? Usually means it's the opposite of whatever your company is entering, usually negative. But sometimes your companies don't do it that way. So again, you have to figure out how is my company presenting these financial statements so that you can make sense to enter them in. So I know for me that brackets mean negative. Okay, so most of your companies will be the same. So net profit of 407 minus 78. So you bring my calculator back up. Hang on, I don't need that one. I've already got one open. So that minus 78 plus 407 should give me 329. Yep, so I know this is another total. So for me, that's a total. I can actually enter formula in Excel to check those two totals. Okay, so always enter formula in Excel for your totals, and then all of these should just be a nice copy and paste. Now, don't need to enter any of these columns. Remember, we just enter the total column for your statement of change in equity. So I'll start with my opening balance, 24,781. 24,781. Profit for the year, let's go into that. 407, I should know that, I just mentioned it. 407. That's a heading, so there's nothing there. Oh, that's what I was doing, I was formatting it. My totals I like to italicize. Just making it pretty, doing a little bit of formatting. My copy and paste actually worked. If yours can't copy and paste, you do need to type every single line in. Okay? So these are my transactions with shareholders, and that's my total. Actually, let's do that. Okay. An underline in. Another underline for my other total. Okay, so that was a heading. So I'm going to enter my exchange differences. 15, negative 90, and negative 3. 15, negative 90, and negative 3. And this was a total. This was the sum of my other comprehensive income. So I'm going to type equals sum, open bracket, highlight those cells, close bracket, and hit enter. And check that that matches to my financial statement, which it does. Okay, and again, that was my total comprehensive income, so that is a total. So I'm going to put another formula in there, which was my profit plus, I can put plus in because I've actually entered this as a negative. Otherwise, if I'd entered these as positive figures, I would have to minus it. Okay, so mathematics. So it should give me 329, so let me just check. Oh, hang on, I'll flip to the wrong statement. Make sure you're on the right statement. So 329, so that matches. Now just to enter my transactions with shareholders, so 1593.1. Oh, hang on, make sure I'm entering the right, yep, share-based payments. 1593.1, and then Wesfarmers always pays nice big dividends. So $2.2 billion, 2270 as a negative, minus 2270, that decreases their equity because they paid it already to the shareholders. Oops. Okay, so, whoops, I'm on the wrong one again. 2270, here it is. Now, they haven't actually got a line here, But this looks like it's the sum of my transactions with shareholders. So I could, if I liked, do a sum for my transaction with shareholders. That would be the 15 plus 93 plus 1 minus the 2270, which would give me 2161. Or I can just go straight to my closing balance, which is what I'm going to do, because I don't like too many lines if I don't need one in there. But if you want to sum your transactions with shareholders, that's totally fine. So that should say sum of these transactions with shareholders. To get my closing balance. So my closing balance is going to be my opening balance plus my comprehensive income plus all of these items, which I'm not going to sum, so I have to individually add. So it'll be all of those plus my opening balance. Should give me my closing balance of 22,949. So make sure that's my closing balance line, which it is. Put a formula in, equals, let's type in equals opening balance plus my comprehensive income plus all of these items here, plus. And because I've entered it as a negative, I can just keep plussing. And hopefully that will give me my 22,949, which it does. That's great. So that is my 2016 year entered. Now that becomes the opening balance for the next year. So I can just go up to here and go equals closing balance, enter, and then drag that formula across. Don't ever have to enter the opening balance again. Now, I can also drag across all of the other totals. As soon as you put a formula in Excel, drag it across so you don't have to worry about entering that line every year. And this one. Oops. Okay, so I'm going to make those pretty a little bit. Actually, I can do a little bit of formatting. Don't need any of these figures in bold. They can all come off bold. And we can format these as the same. So you just click in a cell that you want it to look like, and then click Format Painter, and then paste it over what you would like your other cells to look like. All right. I like to put my totals in italics. So that's my 2016 year done. Let's go and enter my 2017 year. So back here, so I've got profit 2873. 2873, that was a heading, so skip that line. Enter in my comprehensive income items. Let's go to the right annual report. So -2, 23, and -3. -2, 23, and -3. So it gives me a total of 18 and 2891. So 18, yes, and 2891, great. So I know that I've entered those right. Let's enter my transactions with shareholders. So 3, 3, 3, 1, 1. Let's go 3, 3, 3, 1, and 1. And how many dividends did we pay that year? We paid 2234 in dividends, minus 2234. So my closing balance should be 23,941. Let's check. And it is 23,941. That's great. Now, let's go to my 2019 annual report and see if that was the opening balance for 2017, which it is. There it is. So 23,941. Now, if they were restated figures, if Wes Farmers had gone back and restated and the balances didn't match, I would have to put a line in right here. I'll just go across right above opening balance or underneath opening balance. It doesn't really matter. And insert it and put restated adjusting difference, and then I would put the difference between whatever the balances were. So if it was just say 23,940, no, let's say 23,000 and 941, so 23,941, it would be, the difference would be 941. So then I would put here, I would change my formula to say equals opening balance minus this adjusting difference equals, and then that would get me right, and I would be able to then start doing what I'm doing right now. Okay, but I don't have that. My balances actually match. So let's get rid of it, right-clicked it, delete, and let's go and enter these figures. So my profit for 2018 was 1197, -7, -2. So 1197, -7, -2. Oh, they've got different things. Oh, this is good. I'm glad. Now hang on, we've got to make sure we're entering the right thing. So we've done the profit, that's right. Go to items other comprehensive income. First one is exchange differences on foreign operations. And make sure that's right. That's the right one. Okay, the next one I've got in here is cash flow hedges, but it's not in here. My cash flow for hedges aren't until here. Okay, so I've got 160 in cash flow hedges and the remeasurement loss and defined plan of 1, which are those two. So I've got 160 and 1 in there. Was it negative 1 or positive 1? Negative 1. But in here, I've got to add something else. So let's insert that in there and copy this in. I'll update the formatting later. Exchange differences recognised in the income statement. Oops, we don't want that. Click in here. There we go. In the income statement on disposal of foreign operations. So just fix up the formatting. Okay. Now I can go in and enter the figure in, which was -2. All that for -2. So my formula should still update. So it should be 150 and 1347. So 150 and 1347. So that's good. Now I've got share-based payment transactions in this year of 12. So what do I have here? Share-based payment transactions, good. I'll put 12 in there. What's my next one here? Issue of shares. They don't have that this year. They've got acquisition of shares on market for their keep plan. So I'm going to insert in here. And then copy and paste that in right here. And copy and paste that in here. My children have arrived, so I'll just pause the video and I will be back. Okay. I'm going to enter those figures in now. So I had, it was -17. And what was the other thing I had for that year was just equity dividends. So I don't have that or that. I only have equity dividends. So -2529. Let's check my balance. 22,771. 22. Okay, it doesn't match. So just make sure I've entered them right. 12. -17 and -2529. 12, -17, -2529. That should. Oh, I know what. Check my Excel. I've forgotten to add that in. So, actually, this is a good point. A better formula would be to use equals my opening balance plus my total comprehensive income plus the sum and do that. And then that wouldn't have been an error. Would have picked it up. You watch, it's going to make it correct now. There we go, because it wasn't picking up that line because I had individually typed in plus this, plus this, plus this. And when I entered the new line for this year, I forgot to add it in. So, triple check everything. So my formula is out now. It should balance 22,754, and it does. That becomes the opening balance for my 2019 financial year. So I'm going to enter my profit in, 5510. That's my next line. Exchange differences on foreign operations. Let's see, do I have that? I do, and it is the next line. It is +14. +14. I have disposal of foreign operations. Do I have that in this year? No, I don't. So that's going to be nothing. But I do have changes in the fair value of my cash flow hedges, -51. So changes in the fair value of cash flow hedges gets -51, and the remeasurement loss on defined benefit plan, which I also have this year, is -1. Giving me a total of -38 and total so other comprehensive income of -38 and total comprehensive income of 5472. 5472 -38. Good. I'm happy. My totals match. Now to enter my transactions with shareholders. So share-based payment transactions is 18. Share-based payment transactions of 18. My keep. Do I have keep? I don't. Oh, I have a few other ones. I do have keep. It's down here. But I've got a few other. I've got 3 other items. Well, actually, I've only got 2. So I've got that one and that one, because I'm not going to enter this line because there's no ending balance and I only have to enter the total column. So I'm just going to skip that line. I'm going to enter that one, negative 14,606. Right click, insert, paste, delete, so it goes on one line. Oh, I've forgotten the figure. 14,606. Like asleep when you have babies. Changes your brain slightly. 14,606. Okay, so I've entered that line. I'm not going to enter that because there's no ending balance for it. I am going to enter this one because I've got an ending balance of negative 5 for it. Now I didn't have anything for this. Oh, I did have, didn't I? Right down here, I've got the keep. And that was negative 33. So negative 33, and I don't think I had any of those except for dividends, which is they paid 3.6 billion this last financial year. My goodness, 3629 for dividends. Okay, so ending balance is 9971, which is right. Now that balance should also match the balance for equity on my balance sheet. That's one of the checks I'll go through at the end. Okay, so now I can play with it, make it a bit pretty. And that's my statement of changes in equity entered. So that's as hard as it is. Now notice I haven't got figures in any of these years because this item wasn't in any of the other years. Same with this one, same with these 2 items. It was only in 2016, 2017. It wasn't in 2018, 2019. That's fine. You don't need to enter zeros. Please don't enter dashes because it will stuff up your formulas. Just leave them blank. If they don't have any data in them, just leave them blank, as I have done. Okay, entering the balance sheet. Let's go through and have a look at Wesfarmers' balance sheet. So again, I'm going to use the 2017 report to enter them in. I'm going to see if I can copy and paste. Let's do the assets first. Let me paste it. It's pretty cool. So assets is a heading. Current assets is also a heading. To go up fixing the formatting, which I'll do offline and then come back at the end. So I'm going to enter my cash equivalents, right down to other, then that's a total, so I'm going to italicize that. That one's a heading. That's a total, so these are both totals, so I'll italicize those. And I'll put a little total line. I know they're totals because I've spent time with Wesfarmers statements already. But you need to do the same thing and spend time with your financial statements and get to know them so you know what's a total and what isn't. Okay, so I'm going to go and enter in cash and cash equivalents and so forth. So I've got 1, 2, 3, 4, 5 to enter in from this statement. So I'll start with 611 1628. So 611 1628. Let me get this is where these come in handy. Okay, now I'm going to put a total here equals the sum of these items and drag it across and check that it matches 9684, which it does. I'll show you on screen what I'm looking at. 9684, this one here. So that's all of those entered. I'm happy with that. My total matches. It's going to enter these ones. 605, 1042 and so forth. Make sure I'm on the right line. Investments is my first one. Okay, and then I'm up to a total. So I'm going to again equals the sum of these are my non-current assets. Drag that across, 31,099. Does that match? Yes, it does. So I've entered those and I've checked the total and it matches. Happy. So now my total assets is my current assets and non-current assets. And remember the distinction between both of those is we hope that current assets give us benefits within 12 months and non-current assets give us benefit in a period greater than 12 months. As soon as we enter a formula, drag it across so we don't have to enter it again. These are all a bit yucky at the moment. Some are bolded, some are not. The formatting's all out. So I'm going to spend time at the end and reformat it nice. So all my totals I'll italicize. I've got 3 of those. My headings are bold. To take out the little note numbers. Okay. These are all the notes from when I copied and pasted it. Now you might not be so lucky. Yours might not just copy and paste nicely, or it might. If not, you're going to have to go through and type literally each one of these into your spreadsheets. I'm just going to enter my 2017 figures now, my 1013 1633. So 1013. I don't have any of those figures. So see, I'll just show you, Wes Farmers for this particular item has put a dash in, receivables, finance, advances and loans. Whoops. Here, this one here. They've put a dash in. Please don't enter a dash, because it stuffs your formulas in Excel because it doesn't recognise a dash as a number format and it won't sum it for you. So just leave it blank as I've done. If there's no figure in it, just leave it blank. It's much easier. Makes life much easier. Okay, so check that my balance matches 9667, which it does, 9667. Now I'm going to enter my non-current assets 703, starting with 703, 971. Okay, 30448 is my total I'm checking. 30448, and so total assets, again, just check 4115. 4115. So I'm happy with that. Now let's go to our liabilities and see if we can copy and paste those in. Liabilities to net assets, let's do that. And then we'll do equity right at the end. Oh, liabilities to net assets takes me right down to the bottom. Right click, insert, and Control Y repeats your last action. So heading, a total, I can see it says total there, so I'm going to italicize that, it's my heading. And 2 totals here, 3 totals down here. I know that because I've studied Wes Farmers already. Total non-current liabilities is just the sum of my non-current. My total liabilities is the sum of my current and non-current. And then my net assets is my total assets minus my total liabilities. So I know that because I've already been studying the financials. You need to make sure that you're studying your financial statements so you know what's a heading and what's a total. It's very important, especially when we're restating later on. We're just entering at the moment. So at the moment, you just need to know what's a heading, make sense of it, and what's a total, so you can put a formula in to sum your individual items. And then later on, when we're restating, you make sure you don't restate headings and totals. So it's very important. Spend the time now and get to know it. Okay, so my first liability that I'm going to enter is trade and other payables, 6491. 6491. I'm going to go through and enter these. While I'm going, might as well enter those figures as well for 2017. Okay, now I'll put a formula here, equals the sum of, highlight this, close bracket, and drag it across. 10,424 and 10,417. 10,424 and 10,417. Great. So I've entered my current liabilities right. And I'm going to go and enter my non-current liabilities. starting with interest-bearing loans and borrowings, so 5671. Okay, next one. And I'll enter these figures while I'm going. Put a sum in. This equals the sum of my non-current liabilities. Oops. Drag my formula across. 7410 and 5757. 7410, good, and 5757. My totals match. Now, let's sum my total liabilities. So that's my current liabilities and my non-current. So current being the ones that I have to pay in a period within 12 months and non-current in a period for longer than 12 months, ongoing obligations. 17,834, good, and 16,174. Whoops. 16,174, very good. Now net assets equals my total assets from up here minus my total liabilities. Put that formula in and drag that one across. 22,949. 22,949 and 23,941. Good. So I'm happy my totals all match. Underneath here, let's copy and paste in my equity items. These are so easy. It's literally, you don't really do anything with equity, and we don't even restate it when we actually come to restating either. Simply just copy and paste it in from your financial statements straight away. Total equity. Oops. Italicize. Okay, so issued capital is my first one that I want to enter. So 21,937. 21,937. I'm going to use my sheets to enter again. It's nice and easy for me to see. This one's a negative 28. 874,166. Enter these figures as well for 2017. Okay, and put a sum here equals the sum of my equity. And drag that across. I don't have to do that again. Put a nice little border on it. This one too, let's pop a little border. Okay, so I'm happy with that. Now I'm going to go to my 2019 report and try and enter in my 2018 and 19 figures, but I've got to do one extra thing. I've got to check that I don't have additional lines when I'm entering this in. So here's my 2019 financial statement. So I've got cash and cash equivalents, receivables, trade and other, inventories, derivatives and other. What have I listed here first? Got cash and cash equivalents, receivables, trade and other. I don't have that in 2018 and 19, so I'll make sure I leave that blank. I do have inventories, derivatives and other, so everything except for that line. So I know I can start entering everything except for this white line here. So I'm going to start here with the 683. So 683, I'm going to skip over that line because I didn't have it. Oops. 6011, 126. I have a disclaimer. If you can hear children in the background, just excuse them, please. I don't want to have to record the video again. Okay, so now I've entered those figures in for 2018-19. So let's go and check my totals are right. 8706 and 6350. 8706 and 6350. They're done. So I know I've entered those correctly. Now let's check what I need to enter in for my non-current assets. So we've got investments in associates and joint ventures. I've got deferred tax assets. This is why it's really good to print it out, because I'm actually comparing what I've already got in my spreadsheet and what I've got to enter in from 2018 and 2019. I've got property, I've plant and equipment, I have goodwill in both, I have intangible assets, derivatives, and I've got exactly the same thing for these years. So that's great. That makes life nice and easy. If you had extra items, you would just right click and insert and put the extra items in. And And if you don't have the items in, you just leave it blank like I did with the current assets one. Okay, so starting to enter those 748692. And I'll use my sheet. Check my total, 28227, good. And enter these while I'm going. That's wrong. Okay, 11983, and my total assets should be 36933 and 18333. So I'm happy I've entered all of this section right so far. Let's continue with liabilities. Trade and now we've got to check again. Trade and other payables, interest-bearing loans and borrowings. What have I got down here already? Trade and other payables, interest-bearing loans and borrowings, income tax payable, provisions, derivatives, and other. It's exactly the same. So again, I can start entering my current liabilities. 6541. 6541. And the total should be 10025. Good. Do the next one. And total should be 5216, which it is. Now I'm going to check again. What have I got on my financials? So this is what I'm looking at in hard copy, remember. Interest-bearing loans and borrowings, provisions, derivatives, and other. Interest-bearing loans and borrowings, provisions, derivatives, and other. So exactly the same again, which is great. So I'm going to start entering. I've got 2965 to start with. There's nothing for that year, so I'm going to leave it blank and skip down to the bottom, enter these figures. Okay, so my total should be 4154, 14179, 22754, and 31. Oh, something in here's not right. I've got a total 3146. I'll show you what I'm looking at. Looking at this, 3146, and in here I've got 3144. So make sure I'll enter that right. Aha, look at this. I typed in, it should be 2673, and I was flying through, so I typed 2671. Now my total should match 3146, and it does. 8362, 8362, and 9971. Fantastic. So check my items of equity. Issued capital, reserved shares, accumulated losses, retained earnings, and reserves. Now look at this one. It says retained earnings. Down here in this one it says accumulated losses, because in the 2019 financial year they actually did make a loss. Looks like they've got a negative 208. So they've actually added an item into the heading of this. Now it's still the same equity item. It's retained earnings. Accumulated losses and retained earnings is the same thing. It's called accumulated losses if it's a loss and it's negative, hence why it's in brackets. They're showing you if it's in brackets, it means it's an accumulated loss. If it's positive, it means it's a retained earnings, it's a profit. So I'm not going to even change the name of that. I'm going to leave it. If you'd like to, you can update the name there, accumulated losses and retained earnings, but I'm not going to worry about it. So I have exactly the same equity item, so let me go and enter in the equity item, starting with 22277. So total should be 22754. Should match this. Remember, the balance sheet accounting equation has to balance. So this line here has to match with my net assets, and it does. Okay. So my closing balance should be 9971, which it is. Okay, so I do need to do a bit of formatting to make that pretty. We'll keep going. Actually, I'll stop there. I will pause the video. I will go back, reformat, make it pretty, and then we'll move on with the income statements. Now, I'll just show you initially how I'm going to format Painter. So I know I'm finished with those. So I just click in the cell that I like it to be the same color in, where I can start from here and just make all of them white. No fill. And then I can simply click on something that I do like, double click Format Painter, which keeps my brush on, and just paint every second one so that's nice, and then when I'm finished with it, take it off. Just remember to italicize my totals. So that's my words done. I'll do the same thing with my actual numbers. Make sure I'm making, yeah, so this one needs to be white. I'm just making it all the same format is all I'm doing. Okay, now that took away my little pretty lines. So what I'm going to do is just put my pretty lines back in. And also italicize my figures as well. Okay, I think that was it. Alright, I'm happy with the look of that. So that's formatted. Delete those two lines. I'm going to do the same thing with my balance sheet. I'm going to go through and format it pretty, and then I'll come back. You don't need to, I'll just stop the video and we'll come back and do the income statements, but I'll just get it pretty beforehand. Okay, I've got it nice and pretty now, so I'm happy with my presentation. So I'm going to enter the income statements. Let's have a look at our income statements and get to be a bit familiar with them. So, Wesfarmers separates their income statement into two statements. Now, I mentioned this right at the beginning of this video. Some companies will list their income statement and their comprehensive income statement one after the other and call it something like statement of profit and loss and comprehensive income, or just simply a statement of comprehensive income, statement of recognized income and comprehensive income. So there can be a few different names. The idea is you're looking for what's in them. So you're looking for income statement to have revenue listed and expenses listed, okay? And then there's a whole heap of different profit items which we'll go through. And you're looking for a comprehensive income statement to actually show you the items of comprehensive income. So for Wesfarmers, it's this statement here, which are things that aren't represented in the income statement. We go through what is comprehensive income, what's the difference between comprehensive income and normal income, and we cover that, we look at that in depth in week 5 and also week 7 where we cover the restating aspects. For now, you just need to make sure that you're entering all of this information. So you need to make sure you're entering your income statement as well as your comprehensive income statement. Now, your income statement will be maybe set out fairly similar to Wesfarmers. It may not be. So I want you to take the time to explore. It needs to have items of revenue, sales, things like that. And it also needs to have different items of expenses. There'll also be lots of extra lines on income statements. Some companies actually choose to repeat lines in their income statement. So they'll show you one way of calculating profit, and then they'll show you another way of calculating the same profit. So that can trick some students up. So you just have to make sure you're not entering those twice. If they show you two different ways of calculating the same profit. But hopefully most companies will be fairly straightforward like Wesfarmers. Okay, so this is a very simple income statement. So Wesfarmers separates their income statement from their comprehensive income statement. So this is the one statement and this is a separate statement. So I need to make sure I'm entering both of those, and I'm entering the income statement first and then the statement of comprehensive income after that underneath. If your company puts them in as the one statement, that's great. Just enter the one statement. Okay, so in effect, I'm combining both of my statements into one in my spreadsheet. Now, things to note, the statement of comprehensive income actually starts, the first line is the last line of your income statement, it's the profit line. So the very final profit line in your income statement over here, so for me that's profit attributable to members of the parent, that 2873, that's the last line I have to enter in my income statement. Don't worry about these little bits down here. We don't need you to enter those. Stop at the very last profit line. That's the first line that's going to start my comprehensive income statement. So that 2873 is what my comprehensive income statement is going to start with. I don't need to enter it twice when I'm combining my statements into the spreadsheet, into one. I just need to enter it once. So I can skip that line when I'm actually entering my statement of comprehensive income after I've entered my income statement. What I will need to enter is all of the other comprehensive income, okay? So these are all of the other items of comprehensive income that I need to enter. So you can see they've got exchange differences on their foreign operations because they do have international operations, so they're subject to the foreign currency exchange rates. Then they've got cash flow hedges that they use for various purposes, and they've got some realised and unrealised losses on those. And then they've got a remeasurement loss on their defined benefit plan, which is to do with the superannuation for their employees. And then they've got the tax effects on each of those items of comprehensive income. So I want to make sure that I'm entering these as is, and that my other comprehensive income has a total, that my total comprehensive income also has a total. So remember, I defined the difference. Other comprehensive income is all of these items. Total comprehensive income is profit plus the other comprehensive income. Okay, so profit plus other equals total CI. And I cover that again in weeks 5 and 7 as well. So let's go and enter my income statement now for 2016. I don't need to enter anything underneath my final profit figure, so I don't need to enter the earnings per share, and I cover what earnings per share is in the lectures, so make sure you're watching those if you don't know, and you might be able to create some good peer-wise questions on those. Another common question asked is, why are there so many different profit lines? So earnings before interest and income tax, profit before income tax, after expense, after income interest expense, and then profit, final profit attributable to the members. So what do all these different profit lines mean? And again, that's a commonly asked question. It's one of the many questions I cover in the lectures. So please make sure you are watching the Moodle lectures on Echo 360. These step-by-step videos are just for the assignment that I'm doing. Okay, so I'm going to see if this will copy and paste again. So change my tool to the select tool, and let's see if I'm lucky or if I have to go through and actually enter each of these items. Notice that Wesfarmers lumps their revenue into just one line. Okay, so I'm pretty lucky because I only have to enter the one line. You may need to enter lots of different revenue items, okay, and that's fine. You just need to make sure you're entering it. Okay, so let's enter. Oh, it's pasted it. So good. Okay. I'm going to just, I'm going to preempt. Wesfarmers just enters this one line for revenue, which is nice, but we need to separate finance income out. Now, already Wesfarmers separates out their finance costs. You will need finance income and finance costs as part of assignment 2 when we do the restating. It makes life so much easier if you separate it out now. So I can see Wesfarmers separates out their finance costs, and pretty much most of your companies will. Some of your companies will actually separate finance income as well, or interest income. If they don't, and Wesfarmers hasn't, you have to go and find it and separate it out. So because I know I'm going to have to do that, I'm going to add an extra line in now. So I'm going to right click, insert, Control Y, and I'm going to put in here finance income, and I'm going to call this total revenue. Okay, so I'm going to actually enter my total revenue in this line. Won't worry about finding the finance income right now. What I will do later on is when I find that out, I will come back and show you how to update your formula for it. So for now, I just know I have to find it. I'm just going to put my total revenue line in as is. So okay, so 65981. 65981 goes in here. What was my next line? It was expenses, that's a heading. Don't want to enter that. Raw materials and inventory. So Wesfarmers has entered their expenses as brackets, so that's negative. I'm going to enter them the same way. You don't have to. You can, and your companies may not enter them with brackets. They may actually express them with positive, so they'll write them exactly the way their revenue's written, and they're expecting you to know that an expense is taken away from revenue in calculating profit. It doesn't matter which way your company's presented it. What is important is that you're spending the time to get to know how your company's presenting their financial statements, and that you're entering them in the spreadsheet in a way that makes sense to you, so that when you're restating, you know whether you're restating positive or negative figures. So for me, I know I'm going to enter them as negatives, how Wesfarmers has done it. And when I calculate my profit, this is my first profit line, earnings before interest and income tax. That's my first profit line. What I'm going to do is simply add them together because I've already entered it as a negative. So it'll be my revenue plus my negative expenses, which will essentially take one away from the other to give me my profit. All right, so I'm going to enter them as negative 45,525 and so forth. So I'm going to use my trusty hard copy ones and enter these now. Better look at the right year. Okay, now I'm up to a total. So my total expenses equals the sum, open bracket, highlight all these, close bracket, hit enter. Drag it across once I put a total in. I'm happy with all of that. 64,984. Does that match? 64,984, and it does. Now I've got other income and share of profits 235 and 114, and this is my total other income. So make sure that that's so other income. Is my other income an actual item? Yes, 235 and 114 equals the sum of these two. 349 is my earnings before interest and tax. That's my first total line. That's a total. So when I'm going through, I want to make sure that I'm highlighting my totals. It's my first total line. So that I know what's a total and what isn't, because some of these are a bit hard to distinguish on the income statement. So usually your companies will do a profit before interest and tax, and then they'll separate out interest and they'll separate taxation, and they'll show you the difference between those. So make sure that you are taking the time to know what's a heading. Usually that's easy because there's no numbers next to it. What's a total? And that can be the tricky one because it might be an item. Some of them sound like totals, but they're actually items. And then you need to make sure that you're not restating your totals in subsequent assessments. So that's a total for me, so I know that. So once I put the total line in, 349, I drag it across. Let's just check that that matches. 349. Now, so my earnings before interest and tax is my total, 1346. I've done something wrong here. Let me have a look. What have I entered? Total expenses. And then I've got other income and share of net profits. Oh, I know. They didn't put a heading for that line, so it didn't copy across. So in my financials, see here, there's no heading for that total, that 349, so I'm actually going to take that out. I'm not even going to put that formula in. I'm going to go straight to calculate my earnings before interest and tax. So I'm going to say my earnings before interest tax equals my revenue, my total revenue, plus my negative expenses, so minus expenses, revenue minus expenses, plus the sum of all of this other income. So now I'll copy that formula across. So 1346 should be my earnings before interest and tax, which it is. Now they've got finance costs here. That's good. We need to separate out finance costs. Thank you, Wesfarmers, for doing that for me. So 308, negative 308, which means this is also going to be a total. So profit before income tax equals the profit before interest and tax plus my finance, or plus my negative finance, so take it away. So 1038, 1038, good. Then they're showing me my income tax, so negative 631, and that will be my final profit. So negative 631. And my final profit will then be my profit before tax plus my negative tax, so take away tax, to give me my 407. All right. And this is my total as well. That's my final profit figure. Okay. So 407 is the last one that I have to enter. Yep. All right, I'm going to go and enter these figures now quickly. So you can be doing yours while I'm doing mine. Okay, make sure that it should be 64,477. It is. So it should be 4402, which it is. My finance costs. Oh, you know what I forgot to do? I forgot to drag that formula across. There we go. My finance cost should be 264, so it should be 4138, good. And my income tax for that year was 1265. So final should be 2873, and it is 2873. So that's good. I'm not going to enter these. Don't enter anything below that profit line. You don't need it. Okay, my statement of comprehensive income now starts with those two profit lines. So I don't need to enter those. I'm just going to enter from here down. So let's see, can I copy and paste it? Copy. Oh, it's not going to let me. It's going to come up with an error because it's telling me there's not enough lines. So let's insert some lines. Control Y to repeat your last action. Okay, other comprehensive income. Items that may be, that's a heading. That's also a heading. That's not. That's an item. That might be a heading. Let me have a look. Items, yeah, this is, so only my exchange differences on translation of foreign operations has got figures next to it. So they're headings. So I need to go to my exchange differences. So that's also a heading. And I need to enter those two figures in. 15 and negative 2. 15 and negative 2 for that year. Okay, what's cash flow hedge reserve? That looks like a heading. Don't know what these ones are, so I'm going to have to go back to my statement and have a look. Probably do this until I finish the 2018 year, because there may be new items I have to add in, then I have to redo the whole thing again. Anyway, okay, so cash flow head reserve, that's a heading. Then I've got 1, 2, 3, 4, 5 items with figures next to it. They don't look like any of those are a total. So I need to, so from cash flow hedge, that's a heading, and then I've got 1, 2, 3, 5 items starting with negative 34. So that's a heading. And over here, I'll start with negative 34. Let me enter for my trusty hard copy. Nothing for that year, so I'm going to leave it blank. I'm not going to put a dash like what Wesfarmers does. Okay, so that's that done. Then this one's a heading. Items that's also a heading. And there's 2 items under here. Remeasurement loss, 5 and 2 and 5 and 2 for both years, and tax effect. And then I've got 2 totals. So my other is the total of all of those items I've entered. And then my total CI is profit plus the other. So let's go and enter those. So those are my 2 items there. And these are 2 totals. And these were the same for both years, negative 5 and 2. So let's go and see. This will be my total, this is my other, sum of the other comprehensive income. Should match to negative 78, which it does. So let's drag that across. And then this one should be my profit plus minus, in this case, my other. But I've already entered it as a negative, so I can simply sum it. And that should be 18, this should be 329, this should be 2891. So that's those 4 totals entered in. So I'm happy with that. So that's for 2016-2017. Now we have to go and enter for 2018 and 2019. So let's go up to the income statement. So comprehensive income statement. Okay. Now look, they've got restated figures for 2018. So I'm going to enter them here. I'm not going to go back to the 2018 report. I'm just going to use the 2019 report and use the 2018 figures within this 2019 report. And they've got items from continuing operations and then items from discontinued operations. And they've got a few discontinued operations this year. They demerged with a few companies, including Coles is a big one. It's a lot of nice juicy information about their demerger with Coles. In particular, what happened to goodwill on the balance sheet, but more about that in upcoming units. So let's have a look. We had revenue again as one item, and now we've got raw materials and inventory, employee benefits. See what we've got in here already. Because if we've got extra items, we have to add them in. Here's my total revenue. I can add that in as one line. Raw materials and inventory, employee benefits expense. We've got freight and other. We've got occupancy related, depreciation and amortization, impairment and other. So I'm just checking them off. What I've already got in my spreadsheet, what I have to enter in for 2018 and 2019. So I've got all of those items right up to other income. And let's see, other income, and then I've got share of, yep, so I've got that one too. And they've got finance costs, and then they've got income tax expense, profit from, okay, then in here, they've got discontinued operations, and I don't have that yet. So I'm going to need to add in a number of lines for all of these discontinued operations. Okay, so we'll enter up to there, and then we'll add some lines in. So let's go back, 26763 is my first item for revenue. I'm going to use my trusty hard copy and start entering from there. So my total should be 24,592, which it is. My other income and my share of net profits, so it should give me a total of 2,344, and it does. Got negative 210 in here, which gives me a next subtotal of 2,134, and then tax expense of 725, which gives me a final profit after tax from continuing operations of 1,409. So I'm happy with that. Let's go here. Don't have a figure for that year, so I'm going to leave that blank. So my total should be 25,414. I've got 2 items, other income, and share of profits. Give me a subtotal of 2,974. And I've got finance costs of 175 and tax of 859. So my profit is 1940. Now in here I have to add in a number of items. So matched to 1940 and 1409. I have to now add in all of these lines, my discontinued operations, which only happened in 2018 and 19, and then that gives me my final profit. So in here I need to insert 1, 2, 3, 4, 5, 6, 7, 8 lines. So I've got 8 items. So see how these, you don't know whether they're a total or an item. So it's profit after tax for Coles, profit after tax for Bengala, QTAS, KTAS, Quadrant, Buki, Curra, and then profit or loss after tax from discontinued operations. So I have to spend the time to figure out what on earth is a total and what on earth is an actual item. Now I know which ones because I've already spent the time doing this, but I can see that these are actually items and this one is a total. And Wes at Farmers has helped me with the presentation because they put a line here showing me what one's a total. So I know that the profit, this is a total line, so I can use a sum formula for that. This is also, I've already got a formula in Excel for that. So I just have to put, now when I get to that line, I have to put a formula in. So I'm going to start with 1037 for this one. Well, 1037. Okay, so here I'm going to put a formula equals the sum of all of these items. I'm going to carry that across. You can also drag it this way. There's nothing in these years, so just leave those blank. I'm going to put another item in here because what I should have done was take this one out actually, and I'm going to cut that. Okay, let's copy that and insert it in here. My profit should be my revenue plus my expenses plus my, oh, I've already done that. Hang on. I'm just moving my profit line and I'm inserting these items above my profit line. So I need to forget about these for a minute. I'm just going to hide those as if I didn't have them there. And let's go back to here. So going back to 2016-17. So what was my profit? It was 2016-17. I needed to get back to my profit of 407 and 2873. So that was this line plus my tax. We'll take away my tax. And let's do that. Okay, so 407 and 2873. And then for, so where are we? 407 and 2873, good. And then for 2019, I needed to get to my 1409 and 1940. 1409 and 1, okay, so I'm happy with that. So that's the line I have to get to before I can start entering my comprehensive income statement. I'm going to highlight all these and double click to expand them again. Now, I've got my profit line in the right space. I just entered these in the wrong space, and now it's right. Now I'm going to enter all of my discontinued operations, which they didn't have any in these 2 years. So I'm just going to leave blank. I've entered it for that year and it equals 212. Now I have to add that or update it into my formula because you can see it starts with the 1409, then the discontinued operations is taken off that to arrive at the final profit for that year, so 1197. So 1409 plus my negative 212. So it's the 1409, which was those two, plus my negative 212. So it should be my 1197. We can drag that across so it fills everywhere. Now I shouldn't need to worry. 1197 is the profit for that year, which is good. I'm going to enter these, the 2019 figures in now, so 2483. There's none of those two bottom ones. So my final profit should be 5510, which it is, 5510, with my profit or loss after discontinued operations of 3570. And I don't need to enter any of this, remember? I just stop at this profit figure. So that's my income statement items entered. So I'll go through and make them all pretty. Let's format painter them. Okay, now I can enter my comprehensive income statement. So that's my income statement entered. Now I'm going to go through and enter my comprehensive income statement. Now I've got to see what I've got and what I don't have and what I need to enter and so forth. So I'm happy that my profits all match. So I'm starting the statement of comprehensive income with the same figures. Okay, so the 5510 and the 1197, they have to start with the same profit that I end my income statement on, which it does. So I'm happy about that. So 5510 and 1197. So that's where I'm starting. Now I've got to see, what have we got? We've got these two items here. So my exchange differences on the foreign operations plus what's recognised in the income from my income statement on the disposal of those, which I don't think I had in there from memory. No, I only had one line in here for foreign operations. So going to have to insert that, insert another line and copy and paste this in, and make sure I enter both of those figures in. So 7 and 2 and 14. Negative 7, negative 2 and 14 and nothing for that year. So negative 7 and negative 2 and then a positive 14 in this one. Okay, so that's those two entered, so I can cross those off. Then I've got unrealised gains on cash flow hedges. I'm going to have a look. Yes, I've got that one in there. Then I've got realised losses transferred to net profit. I've got that one in there. I've got that one. Now I've got another one here that I don't have, so I have to insert that one there, and I've got share of associates and then the tax effect. So I've got the demerger of Coles one here that I need to add in. So copy it and paste it in here. Okay. So then I can enter all of those items in. So I'm going to go and enter those for the 2018 and 2019 years. So 96, 29, 1140, nothing in that one. And then those two figures. And then for the 2019 year, yeah, that's right. Okay, so that's those entered. Now I've got just one item to enter, the remeasurement loss on defined benefit plan, 1 and 1 in both cases. Nice. That's this one here. So -1 and -1 in both cases. Okay. So I need to get to a total of -38 and +150. Now it should be in there already because I've put formulas in. So -38 and +150, which is good. Okay, so what isn't it liking? Oh, that's right, I took out the profit. Remember when I changed that profit total? I took it out. So that's all right, I can recalculate it. Now let's go and recalculate my profits. It was my profit plus other CI. So profit plus other CI, which was this line. Carry that forward and it should be right. So 5472 and 1347. 5472 and 1347. I'm happy. So remember the difference between other CI and total CI. Other CI is all of the items of comprehensive income. Total CI is other plus the profit. So when you add in the profit to all of the other CI, that's how you get total CI. All right, so now that is all the lines that I need, so I can actually delete all of these. And go and make it pretty, and then I'll come back and show you how we find finance income and so forth. So I'll just fix up the formatting and make it pretty, and I'll be back. Okay, I'm happy with the formatting now, so I'm back. So now we're going to enter our finance costs. Now in my case, Wesfarmers only had one line of revenue, so I was just able to enter the one line into what I call total revenue, and then when I identify my finance income, I can just take it out of my total. If your company's entered revenue as separate lines, you can simply just right-click, insert a line for finance income, so enter a separate line in for finance income, and then make sure that you modify your total to take off that finance income so that you're still left with the original total for revenue. Okay, you cannot add this line into total. You must make sure that the original item in your income statement still is the same figure. All we're doing is separating out a line for finance income, which will make your life easier now if you do it now. So what we're going to do is make sure that we've got the right revenue items. So 27,920, 26,763, 27,920, 26,763, that's good. We're going to go and find items for finance income. Now, your company may already list finance income in the income statement, in which case you're done. You don't have to do it, and normally they will list it where the finance costs are. So they'll actually have finance items, and they'll have finance income and finance costs, and they'll have the positive figure for income and the negative figure for costs. But some companies, a lot of companies, don't have to separate out finance income, which means that you're going to have to go and find it. Okay, so in my case, Wesfarmers has a note for revenue, and it's actually in that note. So I know I can go down to note 1 and see all the extra detailed items for information about revenue that makes up that total 68,444 and 65,981 for 2016. And they'll show me it's a sale of goods, services, and here's my interest revenue, okay? So finance income is not just called finance income. It can be called interest income, interest revenue, finance revenue. Now, you'll have to have a look. Sometimes it's not even in the notes. It's in another section of the annual report. Okay, if you can't find your finance income, calculate it. Okay, so if you think about you earning interest on your cash at the bank, that's essentially what finance income is for most companies, plus some of their other investments, I suppose, that they would earn a return on. That is also finance income. So for an easy way to calculate it, go to your balance sheet and look at the figure for cash, and then multiply it by, say, whatever figure you're getting in the bank for your money. So if that's at the moment terrible interest rate, yes, Christmas 2019, if you're lucky to get 2%, say, in the bank, you're doing pretty good in your cash at bank. Most term deposits are around 2 to 2.5% at the moment. So if you multiplied your cash balance on the bank by 2%, it doesn't matter really. You just choose the figure that seems reasonable to you and write about it in your Word document. That will be your figure for finance income. Okay, in my case, Wesfarmers tells me what it is. So I can simply find my finance income, in which case it calls it interest revenue. For 2017, it was 84 million, and for 2016 was 131. So I'm going to put 84 and 131 in my financials. And then I'm just going to do a formula equals the total revenue minus my finance income to get me to a revenue figure for my financials. Actually, I might just format painter that. Okay, so make sure that when we modify all of our totals that it's not impacting our final profit and loss. It still needs to match to what our original financial statements match, say. So 329 and the 2891. So I know that that still matches, so I'm happy. So let's go and find the finance income for my other 2 years. And again, it should be in the notes because Wesfarmers is fairly consistent. If it's not in the notes, and if you can't find it in the annual report anywhere, and that does happen from time to time, usually you can find it. But if you can't find it, remember, just calculate it. Go to your balance sheet and look at the cash balance and multiply it by whatever percentage you think is reasonable to earn interest on. So, income statement, I need to go to note 1. So here's the note. So it tells me how more detail about the revenue in my income statements. So interest for 2019 was 26 million and 8 for 2018. 26 and 8. Okay, so that's separating out my finance income. Now I just have to do checks and balances and I'm done entering the financial statements. So to check, I look at go back right up to the top to statement of changes in equity, have a look at the final closing balance for equity, and make sure that this matches the balance in your balance sheet. So 9971, 22754, 23941 and 22949. Make sure that that matches the balance for equity in your balance sheet. So 9971, 22754, 23941 and 22949. So that it does, and I'm happy. That's your first check. Your second check is make sure that the amount that you've got for total comprehensive income in here matches the total for total comprehensive income in your income statement. So the 5472, 1347, 2891 and 329. This line, these totals here matches my total comprehensive income in my income statement right down the bottom. So 5472. Let's keep scrolling down right to the bottom. Here we go. This very, very bottom line. 5472, 1347, 2891 and 329. So it does. So I'm happy. Now, when we go to restating, it's really important. These are more checks and balances that you can do. But for now, that's it. It's done. So happy entering your financials, and I'll see you for the restating.